Thanks very much. We analyse the quarterly Explorers cash flow statements when they come out, and I was using this as, a framework for our discussion. But I sort of wanted to really, touch on what we've heard today, and I think, Sam started the day off really well, talking about some of the underlying thematics. Obviously gold is, the flavour of the month. I can't see the volatility disappearing, even post-Trump. We're going to be in an uncertain world. So certainly I think there's a bit more to play out there, but, copper is certainly a longer-term theme that I think is very relevant. And, we're going to see a few other themes during the presentation. I guess one of the things we wanted to bring out was the way the media reacts, and what you read in the press is very short-term, bite-sized, and doesn't necessarily go very deep. And I think, all of you have, made a great start by being here today and actually, hearing from the companies and understanding more about the strategy. I guess looking at how the March survey was reported, there was some sensationalist headlines saying how that, it's a 4-year low, doom and gloom. There wasn't very much positive press. Then we get to us reporting at June. We found a rebound of financing inflows, exploration expenditure climbed, gold remained dominant, but copper and critical minerals looked like they'd turned the corner. What we found is every year when we get to March, it's a down period. There's cyclical times where, things do slow down for various reasons. And so it wasn't really a surprise when you looked at the cyclical trends that we see in the underlying data. One of the charts that we do prepare quite frequently is sort of the number of companies that are preparing 5Bs, and this goes back to June 2013. And I guess we saw a decline, over the longer term as companies backdoor listed in all sorts of projects. Yes, some did go to the wall, but we got to sort of that period where we were around 650 in sort of like 1920. And there was a real slowdown and things were difficult. We then got headlines around zombie explorers. And I think what we sort of want to show with this chart is that for all the predictions that the junior explorer market is going to collapse and there's got to be consolidation, there's always been a level of survival, that the industry does find new things, does pivot and does survive and ends up thriving. Some of the companies that disappear from the 5Bs are actually success stories. So when a company is taken over, like Orriman being taken over by Brightstar, that company comes off the 5B list. So that's one that will decline off that chart. It's not necessarily a negative thing. The other element I guess you will see is, in these presentations, some of the cash balances may be relatively low. And what we found is that, if you look at the percentage of junior explorers that have a cash balance of less than $1 million, it's quite substantial. Now, there's two things that you've got to consider. Is the cash balance low and they're going to raise, and the company's going to raise in a time of desperation? That's going to result in dilution. Or is it that the company knows how to manage their cash flows and get through in an appropriate way, get to a value creation event, then raise off the back of it, and that the spending's actually done with purpose? And I think that's really where you would have seen a bit of a flavour around management teams and backing management. And looking for good management teams is really crucial because you want to see that companies will have that optionality, will retain their funds during those more difficult times and spend wisely. And certainly, there is a large number that do that. Unfortunately, the headlines generally go to those that don't. If you look at, the last 2 years, we sort of track the cash balances. There hasn't been any, huge changes. We've seen a little bit of an increase in cash balances being above 2 million, but generally we haven't seen anything that's earth-shattering. So I think the market's in a pretty good position. What we have seen, though, is the IPO market has been very flat. We haven't worked on a lot of IPOs, and I guess that's started to change now. So we've actually got a couple on the books. If you go on the ASX website and the upcoming floats, there was periods where there was only 1 or 2 there. That's now ramped up again, so there are certainly some there. And so that's definitely worth keeping an eye on. What we've personally worked on is Canadian companies coming down from Canada to Australia. So I worked on the Robex IPO in Australia. After coming down to Australia, they then entered into a plan of arrangement with Predictive. Then another potential value creation event. But certainly, retail investors in Australia are giving a lot more love to exploration than in North America and Canada. So we are seen as an attractive market. So we may see some good projects cross investors' desks in Australia. If you look at the financing cash flows, again, this was really, I guess, a chart that's pretty busy, but it just shows that there are periods where there are, times where you don't raise capital. That ties in with, can you actually get out and drill? What are the capital markets doing? We're about to hit, the Christmas shutdown where ASIC and ASX are going to be relatively dormant. Things traditionally ramp up post-Australia Day. So companies tend to raise in the September quarter, if they are needing some money to get through. Then post-Australia Day, the activity ramps up and we see more activity in March. So I don't think there's anything concerning. We think we're actually going into a pretty positive phase at the moment where there does seem to be reasonable funds available. We've got a couple of IPOs where there's been book builds at the moment and the funds have flowed in relatively well. So that's been a real positive. I guess we wanted to show, what fund finders had also, who'd found money in the June quarter. And what we found was gold was there. But what was actually quite surprising was we found a few coal companies in there. There was copper gold, and yes, BDO with oil and gas. So there is still a mix. It's not that it's impossible for certain commodities to raise funds at certain times. It's really about the quality of the project. So some of the coal raises are more about the project specific rather than the thematic for the industry as a whole. If we look at June, we saw that bump in exploration expenditure. There has been a bit of a decrease in exploration expenditure. What we have seen is certainly a lot of takeover activity, and that certainly kept us busy. So, we reported on Warriedar being taken over by Capricorn. We've done Spartan and Ramelius. We reported on Brightstar and Orriman. So we've certainly seen a lot of, exploration activity by acquisition. So certainly that strategy has been one that we've seen followed a little bit in the past. We are starting to see the drill bit turning a bit more, and we think there'll be some value created by discovery, but certainly M&A activity will still be something that we believe will feature relatively strongly. So I guess we get to the June media, and you can see how quickly things turn in 3 months. It's white hot gold. There's a funding surge. So a real change quite quickly. So the media is fickle. Dig into it a little bit deeper. Inform yourselves and, don't believe the headlines necessarily. So I guess, what's next? And I guess I'd like to touch on a little bit of today's presentations. I think if you look at the things we look for in companies, a lot of that has been hit on in the presentations. It was quite refreshing to hear Justin talk about the gallium market so frankly. Yes, there are some rare earth projects out there that will get some hype, etc. But if there's no processing solution and no offtake, they're going to stay in the ground. So, if you've got a project like Justin's where there's optionality around other projects, that while you work on those solutions, you've still got the ability to carry it forward. That's fantastic. Optionality is something, I guess, that was a feature with Brightstar. When they were bringing their earlier deposits into play, they had optionality around nearby mills as well as the potential they could construct on their own if they needed to. That then provided pathways that was the most efficient way to bring the assets into production, avoid shareholder dilution, etc. So I think certainly look out for optionality. How can you carry the assets forward through a time of, depressed markets? We are going to see cyclical times. We are going to see volatility. So certainly look out for those sort of aspects where what is the exploration expenditure required to hold the project in good standing? Are there payments to vendors of the projects that are looming, etc.? What financing facilities are available? Are there listed investments that can be liquidated? So there's a whole range of things to consider, and I think a lot of the presentations today touched on that really well. Then you look at your bulks, and you certainly could see the processing solutions dealt with today, processing and infrastructure. if you're looking at iron ore, etc., where you are dealing with bulks, it's a logistics game. Getting the product from the deposit to the market, distance can kill the project, access to the port, access to rail. So there's a lot of stranded projects in some of those bulks. And I think, read deeply into those presentations, but it was great to see that, the issues were addressed up front. The companies are clearly articulating their strategy, which is fantastic. What we did see, we'll give you a sneak peek of September. We haven't finished the whole write-up. We will have the write-up of the report done very shortly. But what we found, it won't be a surprise, was that gold certainly had the greatest financing inflows. Lithium was next. A lot of that is underpinned by Liontown with 300 odd million. Copper gold projects certainly featured fairly heavily. Zinc, which long-term is definitely a commodity that needs to be considered, that will be needed. There is a supply problem around the world with zinc deposits. It will come into play. Uranium was another bit of a surprise, but then what we've actually seen is M&A activity in the uranium space as well. So there's actually a couple of uranium transactions bubbling away at the moment, and it's certainly getting a bit of attention. Yes, there is an issue with WA with approvals to actually get to production, but there's other projects that are being acquired. But people are showing interest in the WA projects despite the government position on no further uranium mining. I guess if we look at where people are spending their money to get some insight from what the explorers are doing, gold far and away leads the pack, and certainly the expenditure has ramped up in the September quarter. Copper, we're seeing activity as well. Lithium, there's signs of life there. Uranium, the exploration expenditure is not there, but as I said, the M&A activity certainly is in play. And rare earths, we're seeing a lot of press compared to what we're seeing in exploration, but a lot of the rare earths projects have been around for a very long time. The ability to process, separate the various elements is exceptionally difficult. You look at a company like Lynas, it was a long time to market. That's going to be very similar for a lot of other projects. So when you see the headlines about the Australian government, the US government coming in to support projects, that influx of capital doesn't necessarily solve the problem. And I think that's an area where the strategy undertaken by the government does need to be looked at as to, is it about offtake and floor prices, or should we be looking at processing technology? Should we be funding CSIRO to look at a multi-user processing facility to try to get product to market quickly? So there's a bit of complexity in that space. There is certainly value to be had. I can't see the geopolitical situation changing and China sort of opening up supply to the rest of the world. So the rest of the world will certainly try to get their own supply, and it will throw the prices into a bit of volatility going forward. I guess if we look at the 5Bs in September, relatively stable. So again, the negativity that we saw earlier in the year, it's all looking pretty good. We lost a few companies in September that were replaced by some IPOs. So it's a flat number, but there has been some movement. So certainly I expect to see a few more drop off from M&A activity, but there's a little pipeline of IPOs emerging. I think you'll see February, March, some more product coming to market through IPOs, but there's certainly plenty of good companies out there already on the boards that are worth looking into. And I guess I can finish early so we can all get to drinks, and I'd encourage you all to go and speak to the companies, find out a bit more about the plans, how they see they'll create value. There are so many ways of creating value in the natural resources space, so making sure that you clearly understand the company's path to value creation is key, and obviously make sure that you spread your investments around and diversify along the way as well. Thank you very much, and enjoy drinks. And if you want to get your hands on the publication when it does come out, we've got the QR code. There's the whole library of back catalogues of the Explorer surveys there, so feel free to grab the QR code and download as much as you need. Thank you.